Hello and welcome to today's snapshot. My name is Samson Mzera and I will be taking you through what we have seen for the week and what to expect for next week. So quickly share my screen and I think we can get on from there. Okay, so just to summarize, we've had quite a number of central banks talking this week. If I was to open Forex Factory, you can see that we had quite a number of banks speaking. We started with the Bank of Japan with a surprise policy rate increase. So this is, I think, a bit wrong. So it was from 0% and now just negative 0.1 and now it's at 0%. So they've increased with a percent with 0.1%. And this really sent, it was a very huge surprise in the market. But however, the most important thing was the monetary policy statement, which we'll talk about. And then next, after that, we had more central banks speak. On Wednesday, which was the main event, we had the Fed speaking, also very interesting. We will go through that. And then on Thursday, that's when we had, yesterday we had the Bank of England talking and also deciding on the policy rate. So usually if we have these bank speaking, then it usually sets the tone and the trends for the rest of the month. Because you know from here, the next time we have a central bank speaking is let's see, the next time the Fed is speaking is I think May, if I'm not wrong. Check mood of the market, the tone of the market until the next announcement. So you're able to position yourself appropriately. So this is the CME watch tool. You can, the next meeting is on 1st of May, yeah? And then even the market is still expecting the Fed to remain the same. So it's 1st of May and then the other meeting is on June. So we have the whole of April to see how things are going to go, yeah? So let's first of all dive into what they said. So the main event, the Fed, and it sort of set off the tune. So you can remember what happened if you're monitoring the charts. Let's look at something like GU. This was the move that came out immediately after the speech. So we had the markets really rallying, and this is flat out across different assets. So you can see even for Euro USD, we had this push upwards. Nasdaq T100, this one, we also had this move upwards over here. Now there's something interesting that's happening in the markets, and that is we seem to be having risk on sentiment, despite the fact that we are expecting sort of a I think a delayed hike. Yeah, so we'll talk about that in a minute, but let's just cover what they said first in this article. So the dollar has found good support since yesterday afternoon. Yesterday was on Thursday when some US data prompted a risk-off rally. So risk-off meaning investors want to go to safe haven assets, assets that are perceived as safe. Yeah. Then risk-on are assets that are perceived as risky. Yeah. So risk-on assets include things like euro, pound, and risk-off asset is things like dollar. So when investors want to take on more risk, they go for riskier currencies. When they want to reduce the risk, the dollar then strengthens. So that's what this means. The leading index printed a positive month-on-month number for the first time. The dollar index, I'm thinking, likely thanks to the strong equity performance. Okay, so this I think is either the dollar index or one of the indices in the US. Okay, existing home sales, one of the stock indices in the US. Existing home sales also surprised that. So the jump in the dollar appears overdone. Now I want you to mark that statement. The jump in the dollar appears overdone. The Federal Reserve sent a clear message earlier this week. This was on Wednesday. Yeah, some resilience in activity, and this is now what you're going to use to. Morning, guys. Brian, Kinyanjui, Jason, Manti. Nice to see you guys on the stream. Okay, so The Federal Reserve sent a clear message earlier this week. Some resilience in activity data won't be a barrier to cutting rates as long as inflation shows downwards momentum. Yeah. So I want you to check this heading into next month, because next month is close. And the first major news we have for next month is NFP. Yeah. The first major news you have for the following month on April 5th is non-farm payrolls. Yeah. And here they are saying, even if we see resilience in economic activity, it won't be a barrier for us to cut on interest rates as long as inflation is going down. That means a strong NFP reading won't really hinder the Fed from maintaining higher rates for longer. Because remember, that's what usually the reason why the dollar surges when NFP comes in as a strong reading. Yeah. But the focus or the main point they're looking at the moment is inflation and not really economic growth, because they already know economic growth is resilient, somewhat resilient at the moment. Yeah. So that tells you how actually you should prepare for NFP, because sometimes you might see NFP is coming in and then the market just continues with the initial trend. If the dollar was weakening, it continues weakening instead of strengthening if it comes in as a higher number. Why? Because that's not what the Fed is focusing on. Hence, that's not what the market is focusing on. So sometimes the news is important, sometimes it isn't. But before that, I know we have PCE. Yeah, so we have PCE coming in next Friday. This is also a very important indicator for the Fed. And we will be trying to gauge if it maintains a downwards momentum. Remember, we need to see this trend going downwards for us to be sure that the dollar is going to weaken. So this case here, some resilience in the activity. Now, this is any other news apart from inflation news. Won't be a barrier to cutting as long as inflation shows a downwards trend. And inflation is CPI and PCE. Yeah. So going into April, these are the two things that you should be looking for to set the momentum or to see how the trend behaves. Yeah. Okay. Let's just look at this. The dollar rebound appears to have exceeded rebound rates. Okay. So that's it with the dollar. So having said that, it is clear that they are on a path to cutting, and what they're saying basically is this push that we saw yesterday. So you remember yesterday, actually the past 2 days after now FOMC on Wednesday, which is yesterday and today, the dollar has been very strong. Now I'll be very skeptical with this downwards trend on the dollar. That is a strength on the dollar. I'll be very skeptical with it from a fundamentals perspective, because you're already expecting the dollar to cut rates. And another thing that proves that is the fact that usually what we have is when the index, for example, UT 100 goes higher like that, then the dollar weakens with it. Yeah, because like right now, if you're looking at the Kenya shilling, for example, Kenya shilling has, okay, that's not a good example, but in this case, usually UT 100 shows risk on sentiment. Investors shift from holding cash to holding stocks. That means cash weakens, stocks are strengthened. That's why when you see an upwards trend like this, it normally coincides with euro going up and pound going up. But you're not seeing UT 100 coming back down as of yet. So you've not seen that recovery from FOMC in UT 100. We've not seen that mostly in indices. It's not gone down per se. Now, two things that could be explaining this. Number one, either investors are still in a risk on sentiment on stocks. And number two, performance of companies is proving to be strong despite high interest rates. And that's why you're seeing indices deviating from how it correlates with the dollar. Yeah, so that's one important thing you need to watch out. For those who are trading indices and they're used to correlations, that's one thing you might want to look into. Today, the correlations seem to have parted ways. Yeah, so there's almost zero correlation at the moment. Okay. Number two, it shows that that reversal or that strength in the dollar might be temporary. The reversal or the strength in the dollar might be temporary. Yeah. Why? Because again, back to this statement. Yeah, it is clear that we are on a path to cutting as long as inflation shows downwards momentum. So that was a very dovish tone from the Fed, and that shows us that in the long run we expect the dollar to be very weak. Yeah. Okay. So having said that, going to something like gold, I remember we had this on, I remember traders were trying to sell here. So another bad idea is selling immediately before the news or buying immediately before the news. At some point, you can't really tell how the news is going to go. You're only going to be able to interpret the expectation hours before the news or the outcome after the news. But immediately before or during the news, it's usually very tricky business. But you can see some traders attempted to, especially this looked like a rejection and people attempted to sell over here. You can see that was not the case after the tone from the Fed was more inclined to a weak dollar, yeah, cutting interest rates. Now, why did we have this pushback over here? Well, we did have some numbers yesterday coming in. So let's just go to those numbers. Again, we're trying to analyze the market. We're trying to analyze the news to see exactly how we're going to approach next month. Now that you're trying to decode the tone for next month as traders. Yeah, so there was some positive news yesterday from this, but this again isn't, in my opinion, this isn't really what the Fed is looking at the moment. Yes, it's part of mortgage sales and everything like that, but at the moment, the big concern is inflation. So these huge numbers that we are seeing here, at some point, the news impact on the charts will fade, and it will be a good time to start looking for, okay, where do I spot reversal opportunities in this temporary downtrend? Yeah. Same thing with UT100, not the case, but same thing with I'm trying to look for currencies that are not part of that category. Same thing with for example, Australian dollar. Yeah. If I go to the higher time frame and I mark out my key levels, what I'm basically looking for is areas that I can say I need to wait for a change of market structure at that point for me to confirm a reversal of this trend. So either we wait for that down here or at this point over here. Yeah. So those are the key levels for example, for AUD USD that I'll be looking for to see is there any change of character that can warrant me getting in as in a long position. So if it fails this point, the next point will be, and it fails this point, then the next point will be. Remember, you're using a long-term direction. So this, at least you can allow yourself to have a very big reward ratio compared to what you're risking. So those are the key areas that you'll be waiting to see what happens. Because in the meantime, that strength in the dollar looks like it's going to be a bit temporary. Yeah, now it depends on what currency you also pair it with. Okay. Namrik is asking, Ajay Scott, good morning. Analysis on GU. We are getting onto that. Good morning. Welcome back. The Friday session, we missed you. Yeah, so last Friday I wasn't around, but I'm here now. What will you say is an appropriate risk reward ratio for 100 USD account? It still depends on the strategy, although you'd have to know. Usually, a rule of thumb is if you're using a 100 USD account, never go above 0.01 lot size. If you're using a 100 USD account, risk on simply means investors rushing to buy risky assets like euro, like stocks. That's what risk on means. So when investors are risk on, things like stocks strengthen, Bitcoin, things like that, and then the dollar usually weakens. That's risk on because you're willing to take on more risk. When there is risk off mentality, that is people are afraid of taking on risks, and that can be because of geopolitical tensions or I don't know, anything can cause, maybe tensions in the financial industry, things like that cause investors to be in a risk-off mode. In a risk-off mode, you tend to exit your investments and either liquidate to holding dollars or government bonds or gold for some investors. So when there's risk-off, most of the times, gold and dollar tend to do well. And when there is risk on, gold and dollar won't do as well. But now the one for gold is a bit tricky because it usually changes from a risk on to a risk off asset with time. What does a strong and weak dollar mean? Okay, so at the moment we are saying, now let's talk about GU while you answer that question. So we had a meeting yesterday with the BOE had a meeting. Is it this one? Okay, so the BOE had a meeting yesterday. Just a minute. Yeah, so the BOE had a meeting yesterday, and let's just quickly go through that. Yeah, so the meeting was here. Was it this one? Yeah, official bank rate at 3 p.m. Yeah, so what was the meeting about? The Bank of England opted. Now, dovish, for those who don't, dovish simply means inclined to easing conditions. Easing meaning inclined to lowering interest rates and things like that. And then hawkish means aggressive. You're trying to tighten conditions by increasing interest rates and things like that in a nutshell. Yeah. So the Bank of England opted for a more dovish than expected communication yesterday. So I hope you know what that means, that statement. Yeah. Despite keeping guidance unchanged, rates, that is to be restricted over time, the two most hawkish members changed their vote from a hike to a hold. Yeah. The two most hawkish members are members who are saying, let's hold high interest rates for long. Let's even increase them if you want to. Yeah. So they change their tone to a hold. Yeah. And that is what I believe is causing the pound to weaken at the moment. You have a currency strength meter here somewhere. Yeah. So if you look at the currency strength, let's see. In the past 1 hour, so in the past 1 hour, you can see, okay, in the past few hours from yesterday, you can see that a pound has been weakening quite a lot. Yeah, which is, yes, it was weakening, but it has fallen even more steeply. So I'm trying to see if we have, anyway, yeah. So in this case, pound has been weakening even more than the euro. Yeah. So this weakness is mainly caused by that. Usually when you're trying to decide on interest rates, they have to vote. They have to vote whether to cut, to hike, and things like that. And you can see from yesterday's meeting here, you can see that in the previous meeting, and now what this means, here it means the first number is how many MPC members voted. The first number is how many MPC members voted to increase rates. So this number here, this one. So you can see from the previous meeting, there were 2 members that voted to increase rates. And at the actual meeting, which was yesterday, you can see there was 0. So there was that shift from them wanting to hike to now most of the members don't want to hike. Yeah, and that is what is causing the pound to weaken even further. So if you look at this chart over here, you can see that clearly what we are witnessing is, yes, the dollar is supposed to be weak, but the pound is moving even. That's why you're seeing something like AUD USD has not behaved the same way. You can see that from the move of the Fed, we've not really seen an equal move like what it has done on the pound. Yeah, but now the expectation is if the Fed becomes dovish, then these other central banks will also start being dovish over time. Yeah, these other central banks will also start being dovish. So you're trying to see which one is going to be the most dovish over time. So that's why I was very careful in saying, yes, US dollar is going to weaken over time, but you need to be very careful, especially when you're looking at Euro USD and GBP USD. Yeah. Now we are yet to decode this one, but for GBP USD, the members seeming to be changing the narrative. They also seem to be very comfortable with trying to maybe hold interest rates a bit longer and then now start reducing interest rates. Okay, so having said that, where do you think this trend is bound to go to next? Let's first look at the bigger picture. Let me just clear this up. So the bigger picture is we have been in a range bound market for quite some time now. And the reason is when you're looking at currencies, it's good to look at both economies, both situations to see what is happening across the board. Yeah. So we have this measure. This is a daily chart. We have this zone down here. We have this zone down here, and then we have this zone. So we've been in a ranging market for some time. Yeah. So again, if based on how the market is interpreting, it's possible that we get to this point over here before we finally start seeing, okay, what's next for the pound. So it's possible that we will get to this bottom over here. It's looking very likely based on the tone of those members that have now switched from wanting to hike to holding at least. Yeah. Now, in the short term, what will that move look like? I'll probably be waiting for substantial retracements for me to be able to trade this one. So I wouldn't just jump into this and sell until here. I'd want to wait for some retracements and trying to see whether do we have a reasonable place where we can continue with that trend direction lower. So that's what I'll be for on GU. But if it gets to this point, I wouldn't want to sell further because I need to see if there is news that backs the sentiment that we need to have a weaker pound. Yeah. So probably this can be a good price target, the bottom of the range, because it warrants that reaction warrants it. But how we get here, we might not get here directly today. We might try and see either retracements, pushbacks, and also depending on how the news comes in from the pound area, from the UK area. So this is one GBP USD. Euro USD, let's go to the news on the euro. You can keep the questions coming from the chat section. How do I spot momentum candlestick after pattern breakout? Okay, while we go to euro USD, there is this question about trading breakouts. I'd want you to be very careful when trading breakouts. It's close to very difficult to trade breakouts on a low time frame. Something like M5, M15, it's very difficult to trade breakouts on such time frames. Why? Because often we have those reversals coming in the market. If someone is looking for liquidity, then they can't manipulate, or you can't really accumulate orders in a long period because the market is bigger than any one institution. So it usually happens in the shorter time frames. It's very easy for liquidity grabs and things like that to occur. So when you're looking for breakouts, it's usually more advisable to look for substantial candles, but on larger time frames. If something has broken out maybe for 4 hours, then it's a valid breakout. Why? Because it's very hard for even an institution to grab liquidity for a period of 4 hours. The market is very big. Yeah, so fake outs happen less often on bigger time frames than on smaller time frames, and this is specific for if you want to trade breakouts. Yeah, it's very careful. You need to be very careful when you are analyzing these sorts of breakouts. So look for substantial candles, a full bearish or bullish candle with very little wicks, but on a bigger time frame, because it's much harder to maintain a liquidity grab for a long period of time. These markets have a lot of liquidity, and hence institutions can't really maintain also unless it's a central bank. And I don't think central banks are in the business of fake outs and breakouts. But again, that amount of liquidity is only possible for banks, limited liquidity, maybe in 15 minutes, 1 minute. That's where you can have fake outs. But in 4 hours, it's again very difficult. But it does happen, but it's more difficult for it to happen. So that's how you work with your breakout trading strategies. what is happening to USD JPY. Okay, let's first cover the euro and then we go to USD JPY. So we've covered pound. SNB was straightforward. Yeah, they were saying that their currency is very strong, needs to be weak, and also cutting interest rates. So it's very straightforward where the Swiss National Bank wants the Swiss franc to be. We don't have, or euro is here. Yeah, so PMI's manufacturing outlook, economic outlook on the Eurozone. So just a minute, let's see what they're saying. The soft economic outlook in the Eurozone has been priced in for a while, and with markets relatively confident about the June central bank cut 23% basis point priced in, it's most likely that the dollar rate expectations are set. Okay. So it remains unlikely that the pair can enjoy a sustained recovery without a decline in the dollar. So here it's also appearing very clear that for Euro USD to strengthen, it's all dependent on the dollar weakening and not necessarily the euro strengthening. Yeah. Yes, data appeared overdone, considering, and you don't feel Euro USD should fall much further before bottoming out. Okay, so it seems as though this website is, the analysts on this website are thinking that the dollar has to weaken, you know. So from what we are reading here, it seems as though they really are for the idea that at the moment that strengthening of the dollar seems to be overstretched. Yeah, but you don't just take, you have to take it with a pinch. Is it a pinch of salt or a grain of salt? Why? Because yes, we might see the US dollar weakening, but just think about it for a minute. Between those three economies, the US, the UK, and the euro, which one has better fundamentals at the moment? Which central bank can afford to keep interest rates higher for longer? Yeah, it's obviously the US. Why? Because the economy is still growing. Things like Nvidia are still making profits. Companies like Nvidia are still making profits. The Eurozone seems to be struggling. Yeah, so yes, we might start seeing weakness on this dollar pair. That means a reversal, but I'll be very careful with where I choose to play that reversal from. Yeah, so again, on this one, what you're simply looking at is just your key levels. You don't want to okay, just a minute. Yeah, so on this one, what you're looking for is, number one, in this case, I just want to play a continuation of this trend until it's certain that there is strong enough sentiment from the Eurozone to reverse this move. Because yes, we know the dollar is going to be weak, but the Eurozone has to show signs that the euro is going to be even weaker. That's when you decide to change direction on this. Yeah, so having said that, if you really want to go long on this pair, then those are your key areas or key levels to watch out for. You have that area and you have this zone over here. So those are your only key levels to watch out for at the moment. However, for the rest of us, you can try and see how you get a continuation on this push downwards. So it's going to be very important how this plays out. And that's one thing we also need to know. Moving on to gold, is it is clear that there will be a detachment between how euro, pound, and how gold moves. Why? Because gold doesn't hold the same fundamentals as the eurozone and the UK. So in this case, you can, because you know it's going to be a weaker dollar, yeah, you can start anticipating where do I look for reversals on gold, especially on these key levels. So if I go to 4-hour time frame, the key levels for gold in this case can be here. You can either wait for a deep pullback to this region over here, or you can wait for a clear change of character, maybe at the current level. At the current level, yeah, you can wait for a change of character here and see if it's going to. Now this needs to be on a 15 minutes time frame. This needs to be on a 15. You need to wait for a clear change of character, then you can see if you can continue going higher on this, because clearly we're going to continue seeing a weak dollar. But not that doesn't mean again these ones are going to go up. Have to be northern ones. Okay. What is happening to USD JPY? Before we've gone to gold, USD JPY is what you're going to next. And it had very good headlines this week. Okay, so we know that on Tuesday, what happened? Bank of Japan finally ditched negative interest rates, and they hiked from -0 to 0. So now they're offering 0 returns instead of negative. Negative meaning you're the ones paying to deposit money. Abandoned OECC control, yield curve control, yet ETF purchases are set to continue until further notice. Yeah, the fact that the Japanese yen was broadly weaker shows not only was this already priced in, but the markets expected more from the BOJ in terms of tightening. This is one way to think about it, that they said this trend over here. If you look at this trend, let's look on the, is it daily is enough? Weekly. This entire trend from 2021 was because of Japan was having bearish. So Japan was having not bearish, but easy monetary policy. And the US was hiking rates. So you have BOJ was like having negative rates, and the Fed was hiking them. Yeah. So the difference between what the Fed and what the BOJ was doing is what caused this proper uptrend over here. That's number one. So we need to know why we got here in the first place. So now what they're saying is Japan is turning that narrative. It's already raising rates while the US is thinking of cutting rates. Now, what do you expect ideally? You'd expect this whole move to reverse. Yeah. But that's not happening at the moment. Why? Number one, they said, yes, we are raising interest rates, but we might still purchase bonds if we want to. So that is not giving investors confidence, because purchasing bonds meaning you have to release more Japanese yen into the economy. And if you're releasing more Japanese yen into the economy, it's going to be weaker. That's number one. The other way of looking at it now is this, where investors expected tougher language from the BOJ in terms of hiking and things like that, but that's not what they got. So USD JPY, okay, that's okay. Now, the thing that is preventing this currency from going higher, I don't think they've summarized it here, is the Bank of Japan has a notorious history of getting into the FX market. Yeah, if they see the currency is too weak, they might want to, they might want to come in and start propping it up. Yeah, so that's one thing traders are afraid of. So that is the question, what is happening to USD JPY? So the Bank of Japan has a notorious history of coming back to the markets, and the same thing with the Swiss National Bank. They have this behavior of going to the markets and being traders themselves. Yeah, so that's why investors are being careful. Yes, we might go higher because the tone seems, yes, we've shifted from negative rates, but it seems like everything else is still in place. Then we might go higher, but there is the risk of the Bank of Japan coming into the markets and also selling USD JPY. Yeah, so that's the problem with this. So trading yen at the moment is tricky business because you need to be very careful. You never know when they're going to come in. And the last time they came into the markets, I think we were all there, was this time. We had this one. There was a time they also came to the markets. I don't know if it's, let me see. Yeah, so once in a while they'll come to the markets and intervene. Last year they also did an intervention. I don't know which move was it. I think, was it this one? Yeah, either this one or this one. So, oh, is it? Okay, this one or this one. You can just Google and see BOJ intervention. Usually they come into the market. So there's that risk of you're trading, you're long, and then they do that thing for you, So it's always very notable to just be careful when trading this higher. So you can see it's gone back to where it was. This is 151, a key level, because this is where we were in 2022 and now 2023. And if we break this zone, then that risk of intervention is even. So the higher we go, the riskier it becomes being a buyer on USD JPY. Okay. I think that's answered. Stanley is asking, regardless of any news for the dollar pairs, they'll coincide with the DXY. They all coincide with the DXY. Okay, so dollar index. Let me just open that. So the thing about dollar index and why I don't look at it much. Just a minute, let it open. The reason why I don't really, I'd rather look at the individual. Well, number one, dollar index is made of individual currencies, so you'd rather analyze the individual currencies. But mostly the dollar index is made up of a big chunk of it. A big chunk of the dollar index is Euro USD. So you can keep on asking the questions while we. So assuming I've opened the dollar index like that, and let me just remove this. Just a minute. And then I look at something like Euro USD. So you can see that. So the orange line is Euro USD. Euro USD. So you can see that Euro USD is just the dollar index is just an inverted copy of Euro USD. Yeah. So at the same time, you can just look at Euro USD and you'll get all you need to know about dollar index. So that's why it's good to just look at the currencies individually. So this orange line is Euro USD and the current chart is a dollar index. So you can see it's just an inverted copy of that. So you can either choose to analyze currencies individually because it makes a lot of sense because we have euro forming a big chunk of the dollar index. Yeah, so you can just look at one and then it will get you guided on the other one. Okay. How do you identify trade breakout and retest on market structure? And what time frame do you use? Okay, that's more of a strategy. We have a strategy playlist coming up. I think the first video should have started rolling out, but just be on the lookout on the FXPesa page. We've done a breakout retest strategy. We've done market structure strategies. So those ones will be there if you want to use those. So just be on the lookout for that. This session is specifically for just what to anticipate in the markets. What is your market expectations next week, and what is the asset in focus? That's a good question. Okay, so for that, now we know 3 banks a week. Actually, yeah, 3 banks: Swiss franc, pound, and Fed. Yeah. So your work is to know which currency is looking strong, which currency looks like it's still holding out with strength. That's how you probably start your analysis. So something like Canada, let's look. They had an inflation report. I think we had a CPI for Canada, if I'm not wrong. When was it? Just a minute. Just a minute. Yeah, we had Canadian CPI. Here it's saying it's okay. This is very weak. So Canadian inflation came in very weak. So okay, so this one obviously it's going to be weak. Let's see which other currency. Japanese yen, which is the one. Okay, now let's just talk about this in a minute. When you're trying to, before we get into the asset for next week, when you're trying to compare which currency to trade versus which currency, it's good, number one, to understand the fundamentals. We know for a fact Japanese yen might continue weakening. yeah, except when they come and intervene. So it's not a good pair with USD. Pound, we've already seen the fundamentals are shaking. Yeah, same thing with the euro, but the euro seems to be holding steady. So for if you just want to trade pairs, euro USD might be the best candidate for you. Yeah, but then again, moving on to something like Swiss franc, we know that they really want to weaken the Swiss franc, and the Canadian dollar is one that you might have to look at fundamentals further, and the Australian dollar. Yeah, so that's probably why the dollar is strengthening at the moment, because in as much as it's supposed to be weak, the other currencies are also very weak. So we need just one or two good currencies that we can pair against. Yeah. So probably Australian dollar. Look at the fundamentals for this and the fundamentals for, was it New Zealand? Was it Canada? These two. Yeah, because you know this whole lot over here, it's not looking quite good in terms of fundamentals. Okay, so moving on to that, next week we have CPI for Australia. We have and copy CE. Yeah. Today we have the Fed chair speaking, but I don't think he's going to say anything important due to the live opening remarks at a Fed listens event. Yeah, so it's not going to have an impact. I don't know why it's even kept here, but anyway, he might say something. So now we talked about expectations 2 weeks ago. Now that means if I see on the forecast coming out and I see we're expecting a higher inflation reading for Australia, then that might be a good candidate to pair it against. AUD might be a good candidate to pair it against. Let me remove this. So Australian dollar might be a good candidate to pair it against any of these over here or down here. If the expectations come in and you're expecting very hot inflation from Australian dollar. So for example, if I look at AUD USD, it gives me leeway to look for potential reversals backed by fundamentals. That's why you're seeing, yes, this one has weakened, but it has not completely moved past where it started. Yeah, let's wait and see the forecast for CPI, because that might give us the reversal that we are looking for. Yeah, that's for next week. That's how I'm going to approach this market. So I'll either, once the forecasts are out, usually the end of the day or by Sunday, then I'll be trying to position myself market structure, change of character here, or here, wherever it will have gotten to. And if I'm already late, maybe a continuation upwards. If we're expecting high inflation. Yeah. Okay. Next thing you're looking out for is the copy CE. Yeah. Although this one might not start taking effect maybe towards Wednesday, Thursday, that's when it might start being effective. But again, if the forecast for this comes in higher, then the current trends in the markets are going to continue as is. But if we see a weaker reading for copy CE, then that warrants reversals on most of these charts. That warrants looking for reversals on some of these charts. Yeah, and those reversals more so in gold. Yeah, just the forecast are enough. You don't need to trade during the news. You can either trade the anticipation or the post news after the news. Yeah, again, gold doesn't have fundamentals to say it's going to weaken, so this one you can look at it today. But these other currencies, their economies are looking very weak. It's good to be very careful approaching them. And related, is that MT5 chart you're drawing on? Yeah, this is MT5. You can, as long as you're used to whatever platform, I don't think you should struggle too much knowing how to draw the objects. So again, it's not the best charting platform, but if you're used to it, then things come naturally. You know where to find things to mark with. And I know TradingView is a preferred alternative, but if you're used to this, just use it. Yeah. What do you mean by the Fed and USD is weak yet interest rates were held steady? Because inflation is supposed to make USD, is not supposed to make USD stronger. Okay, so we had a session about this 2 weeks ago. So go look at the market snapshot for I think 2 weeks ago. But in a nutshell, you don't trade the current news, you trade what you think is the reaction to that news. Yeah. You don't trade the current news, you trade what you anticipate to be the central bank's reaction to that news. So if I see inflation is coming in high, I know the central bank is going to want to maintain high interest rates to prevent inflation from being high for long. And because I know the Fed is going to maintain high interest rates, then it's going to be a strong dollar. So you're thinking one step ahead. Yeah. If I see, and this is not a good example, but if I see, for example, GDP is coming in weak, then I know the Fed will want to lower interest rates. That means a weak GDP is bad for the dollar. Yeah. So you're always thinking one step ahead, because interest rates are what determine either how inflation goes or how the economy does. So you're thinking how is this going to impact interest rates? And there is where you have your reaction. I hope, Wira, you answered the question. But just refer to the two previous market snapshots. There is the one for the other week. Do you advocate for a single large lot size or many lots? Now that depends on how you choose to trade. Currently, I'm in a position, and I've put multiple positions, but that's just how I trade. Yeah. If, in my opinion, I usually think placing everything on one single trade is it's going to be very tough. So you can spread out the trades. That's what I usually try to do, just to spread out the trades, and then from there I monitor how these trades do. So I don't try and place my entire trade position. If I'm planning on trading 0.1 lots, I'll probably enter 0.05 first, see how it goes. If it continues going against me, that's when I'll probably add another one. If the whole strategy still makes sense, if the whole setup still makes sense, then I'll add one much later. Yeah. Same thing, I can scale. You can either scale out or scale in. So if you're scaling in also, if you're in profit and the setup is still making sense, then you can add your additional position. So that's just part of how I manage my risks. Your view on prop firm passing. I think that's related to this. But if you don't take prop firms unless you're very confident with your strategy. That's all I can say. Because again, there is no difference between a prop firm that's giving you a $10,000 account on a 5% daily loss limit, when you can just deposit $500 in a broker and trade with a leverage the same size. At the end of the day, you're still trading the same thing. Yeah. So the only difference is the amount you've paid. But if you can save and get to that $500, that's the same thing as a $10,000 account with 5%. Is it 5% drawdown rule? Yeah. So depends on how you approach it. Unless they've given you the account for free, because even for prop firms, the leverage is much lower. It's usually 1:30, 1:100, and you can get 1:400 with a broker. And if you have a $500 account, you can pretty much enter the same position size at the end of the day. Okay. Having said that, thanks for attending today's session. If you've missed any part of it, you can always just rewind the video and then see what part it is to analyze. So again, main theme for the day, dollar is weak, yes, but it's weak against what? Because these other currencies are also looking very much weak. Euro and pound, for example. So how do you play them? Try and pair them up. Go to the currency strength meter, see which is the strongest currency, understand the fundamentals, and then now try and pair the weak and the strong currencies and make a continuation from that. Number two, expectations for next week, Australian dollar. If you are expect high inflation, then it's going to make a good case for a reversal. In the meantime, also, this might be another good case for reversals if you wait and see where the market structure shifts. Yeah. Okay. Having said that, see you in the next session, and thanks for attending this one.